this video you will learn treatment of adjustments in final accounts. As you already know that in first video of final account you know how to prepare trading account, PL account, balance sheet and concept of final accounts. And in second video I have solved a complete questions and I have prepared trading account, PL account and balance sheet. To understand the treatment of adjustment in final account, you must watch the final account part 1 and final account part 2. So let's start. Treatment of adjustment in final account. In your question, a trial balance is given and some adjustments are given below. And these are the adjustments. What are these? These are the items of expenditures and incomes which are related to current year but still not recorded in current year or still outside of the books of accounts. As you know the principle of accounting, all the expenditures, all the incomes must be recorded in the year for which the accounts are going to be closed. I am going to talk about some adjustments and how will you treat it, because it is not recorded in trial balance, because these are not appeared in trial balance. Either it is recorded in trading account and balance sheet or profit and loss account and balance it. Sometimes the adjustment items are recorded in trading account and profit and loss account. Okay, I think more than 99% adjustments are commonly recorded in balance sheet, that is balance sheet. And this is for trading account and this is for profit and loss account. I want to say you that either trading account or balance sheet or either PL account or balance sheet, this balance sheet is common in both conditions. Let's see some important adjustments which can be given in the examination and how do you treat such adjustment in final account. So let's see some examples. Here some important adjustments are given which are already given below the trial balance. They are outside the trial balance. If the points are given in trial balance, they are either included in only one account, either trading account or profit and loss account or balance sheet, if they are given in trial balance. But if the items are given outside the trial balance, they must be recorded at two places. Once again I want to repeat that the items given in trial balance, that can be recorded in only one place, but if they are given outside the trial balance, recorded in two places, trading or PL account and balance sheet. So you see here closing stock. How do you treat this closing stock? If it is given in trial balance only, it is recorded in balance sheet, asset side of balance sheet. But if it is given in adjustment, as you know that trading and PL account have the same nature, because these both accounts includes incomes and expenditures. Okay, and other is balance sheet. Balance sheet, this is for liabilities and assets. So any of these adjustments Either they should be recorded trading or PL account, only one between these two, and balance sheet. Balance sheet is common. So if there is closing stock, we have to record in CR side of trading account. CR side of trading account. Suppose here is trading account, debit credit. Here I have made PL account, and here I have balance sheet. In balance sheet, here is liability side, here is asset sides. Okay, here debit, here credit. Here I will write expenditure side, here income side. Okay, similarly here also expenses side, income side. Okay, so I have trading account, PL account, and balance sheet. This, among these two account, any one of them, and then after this balance sheet. So either you have to record in this income and expenditure sides, and another for liability and asset sides. Here is closing stock. The closing stock should be recorded credit side of trading account. It means you have to write in trading account by closing stock. S3, by closing stock you have to write. Okay, that is for amount side. For example, I have given you. And if it is recorded in trading account, it must be recorded in balance sheet, and in balance sheet it is written in asset side. In asset side you have to write closing stock. Clear? In credit side of trading account and in balance sheet you have to write asset side. Okay, next, outstanding expenditure. These are the expenditures which are due but not paid. These are related to the year but not recorded. These expenditures are due but not paid. Suppose there is salary. Suppose there is salary 15,000 but still remaining to pay 5,000. So what is the real expenditure of salary? 20,000, and therefore the outstanding expenditure you should add. Outstanding expenditure you should add. So where if there is outstanding expenditures, payable expenditure, expenses to be paid, different words but meaning is same. That is outstanding expenditure, remaining to pay, is still not to be paid. That is outstanding expenditure. So because it is expenditure and this is to be recorded in debit side of trading or PL account. Why? Because if it is salary that goes that sent to in profit and loss account, but if it is wages it should be recorded in trading account. So that depends upon expenditure. Suppose that is salary. In trial balance salary is given 50,000 and outstanding salary is 5,000. So salary is related to profit and loss account. So here salary, you have to write here salary and add outstanding salary, and you have to write here, because salary is related to profit and loss account. But if that is there is wages, if there is written outstanding wages, if there is written outstanding wages, then wages is related to trading account, then here you have to write wages, it is wages from trial balance, and this outstanding wages from the adjustment you have to add here. So it depends upon the items of expenditure. Therefore I have written debit side of trading account or PL account. If wages, in trading account. If salary, in PL account. Carriage inward, trading account. Outward, PL account. So what types of expenditure is that? And another, because it is outstanding, it is liability, because the company should pay. It is due expenditure but not paid, so it is liability, and therefore it should be written in liability side. It means you have to go in balance sheet, and here you have to write outstanding salary, wages, commission. What types of expenditure you have to write outstanding here. Now next adjustment is accrued income. Accrued income. What do you mean by accrued income? It means the income is generated but cash is not received. I have made income. Company has made income but not received. It means income to be received. It means it is the income, therefore it should be recorded in credit side of PL account. And because it is not received, it is receivable amount, and as you know that receivable amount is assets, therefore it is recorded in asset side. And how do you treat? Suppose this is accrued commission, maybe commission, accrued rent. Suppose as I had given you example here, salary and wages. Okay, similarly there is accrued income, there may be accrued commission, accrued rent, accrued interest. That item should be written. So you see in trial balance there is commission, and the commission is recorded in income side here by commission. This is from trial balance, and now you have to add accrued commission. This accrued commission you have to add in profit and loss account, and because it is recorded in asset side, you have to write in asset side. How do you write? You will write here accrued commission. Similarly, next point is prepaid expenses. Prepaid expenses, it means prepaid salary, prepaid wages, prepaid rent, prepaid any item of expenditures. How do you treat this prepaid? I don't have place, therefore I am going to write these three items. I am going to write here. Okay, so next point is prepaid expenses. The expenses which is not related of the current year. Suppose we are in 2081, but this is expenditure of 2082. We are keeping the record. We are going to close the books of account of 2081, and this is expenditure of 2082, but wrongly it is paid, and therefore this expenditure should be less from related expenses. If it is wages, here you have to less prepaid you have to less, and if it is salary, here you have to less prepaid, you have to less. Understand? Therefore I have written less from related expenditure, and because it is expenditure of 2082, but paid in 2081, it is assets for us, and therefore you have to record in asset side, because it is receivable amount. Similarly, if it is pre-received income, so pre-received income means this is income of 82, but wrongly it is received in 81. So what will you do? You will less minus from related income, either from trading account or profit and loss account. So what types of expenditure is? Suppose that is advance income, or suppose that is advance commission. In place of income, that may be advance rent, advance discount received. So commission, advance income, that may be commission, and commission income is here by commission. It is from trial balance. And now from adjustment you have to less advance commission, you have to less. So I have written here less from related income and from trading and PL account. And because it is received and it is not income of the year, it means it is payable, it is liability for us, and therefore you have to record in liability side. It means you have to record in liability side. In liability side you have to write advance commission, or advance income, or advance whatever there is. And next point is depreciation or written off. What is this depreciation? Actually, depreciation is charged on fixed assets. Suppose machine is being used whole year, and because of its use the value of machine is decreased, and this decreased amount is known as depreciation. Suppose there is written 10% depreciation on machinery, that may be 10% machinery written off, 20% furniture written off, or depreciation 20%, both are same thing. Because depreciation is expenditure, it is recorded in debit side of PL account. Okay, depreciation should be recorded in debit side of PL account. Where is debit side? Here is debit side. So here you have to write depreciation, to depreciation. And because it is expenditure but not going to be paid cash, it deducts the related fixed assets. And what is the fixed asset? That is machinery, and machinery is already standing where? In asset side, and you have to less depreciation. Suppose machinery is 10 lakh, here is 10 lakh, and depreciation is 10%, that is 1 lakh. It means now the value of machine will be remain 9 lakh. In this way we have to make adjustments or treat the adjustments in final account. In conclusion, the adjustments which are given outside the trial balance are recorded in two sides. One side is either trading or PL account, and another balance sheet. In trading and PL account, that depends upon the items. If wages in trading account, salary in PL account, commission in PL account, in this way. And in balance sheet, if it is liability, in liability side, and if it is assets, in asset side. It will be more clear when I solve a question. And you also, by taking these ideas, by taking this knowledge, you solve the problem, you see the example of your books. I hope that you will understand. If If my video is helping you, please like, share and comments. Thank you so much.